fundsupermart.com.
Hi, what is your outlook for the equity and fixed income markets respectively for the next 2 to 3 years?
Well, we do think that the equity markets are likely to outperform over the next 2 or 3 years on a number of factors. First of all, if you look at valuations across Asia, it remains below their 10-year averages, and therefore that's a pretty attractive proposition. And more importantly, we are seeing some improvements in the macroeconomic performance across Asia, such as in China, such as in Korea, such as in Singapore. And therefore, when you combine cheap valuation equities and also an improvement in macro fundamentals, then equity seems to be a better choice or an outperformer in this environment.
Fixed income has enjoyed a very good year in 2012. Do you expect this performance to continue? What are the risk and return drivers you foresee in the bond market?
I think for bonds, for the next, again, 2 or 3 years, to achieve the same degree of return or same magnitude of return that we've enjoyed in the last 2 or 3 years will be quite challenging. Spread have compressed quite significantly, and therefore I would recommend investors to treat fixed income products thinking more about their yield rather than potential to generate capital gains. Obviously, some markets such as Asia bonds or emerging market bonds, on top of their yield proposition, they also have the FX component that can enhance return as well. So therefore, on the fixed income markets, I would recommend Asia fixed income or emerging market debt rather than developed market instruments.
For equities, which geographical regions or sectors do you see the most opportunities?
For the equity space, we think that China is likely to be the outperformer within Asia. The reason for that is that they do have extremely attractive valuation. If you look at PE or PB, they're very much at a bottom of a 10-year range. And we are seeing very solid rebounding growth, and therefore that's going to be, I think, a very strong catalyst for outperformance in China. Subsequently, Northeast Asia, Taiwan, Korea, because of their linkages with China in areas such as consumer electronics, chemicals, steel, heavy machineries, and that these two markets, which have been lagging in the past 1 or 2 years relative to Southeast Asia, I think they will provide more opportunities. Likewise with China.
Conversely, which areas are you more bearish on?
Well, I think, first of all, cash is clearly something that we should be looking to underweight significantly, not only because it's providing very little return and it's also losing to inflation. But I think in terms of other asset classes or other areas, exports is probably still going to have a tough time, since the US and Europe will still be going through a very tough consolidation in their growth. The fiscal austerity will still be biting, and therefore demand for exports from Asia, I think for this year will still be a very challenging environment. So export, I think, we'll be a bit more cautious about.